Hi everybody, Joshua Barks here with Keller Williams Realty Boise and Barks & Co. Real Estate, coming at you from my dining room table because we're all under quarantine. I still wanted to put together this video because I still think it's very important to go over the market dynamics and what we're seeing out there. And this week I've gotten so many questions from people because everyone's just uncertain of what's happening right now, and the market has been, as a whole, the economy has been volatile. And so people are saying, is this another 2008? What's going to happen to the housing market, and how is everything that's happening globally going to affect me? And the honest answer is it's day by day, hour by hour. Everyone's situation is going to be a little bit different than somebody else's. And I have people right now that are saying, you know what, Josh? Right now we're on pause. We're going to wait for this to blow over or hunker down and get through it. And then we'll pick it back up when the time feels right. And I'm 100% supportive of that. And not only that, but I also have people that are saying, I know all of this craziness is happening right now, but I still need to buy. I still need to sell. And you know what? We're still able to do that with our new protocols in place for safety, and then our smart marketing strategies, and then the ability to do virtual showings and virtual meetings, and essentially doing so many things that technology couldn't do a couple of decades ago. So we're truly blessed to be in the world that we're in today. Even with everything going on, things are still able to move. So I'm here to be that calm voice of reason, supply you with all the facts and figures that I've worked tirelessly all week to put together. This video is going to be jam-packed with a lot of information, and I truly hope that you find it valuable. So without further ado, let's get started. Okay, so what is happening in the real estate market? Well, in order to understand that fully, we need to start talking on a national level and go macro. Then work our way down to discuss what's happening locally and on that micro level. So first, when we start talking about our national economy and what's happening there, the number one question that I've been getting all week is, are we headed for a recession? Well, Google defines a recession as a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. So then when we turn to Goldman Sachs GDP forecast for 2020, the end of quarter one being the end of March, they're anticipating our GDP overall to decrease by 0.2%. Then, because of all of the shutdowns and everything going on there, they anticipate that to roll over into quarter two, so April, May, June, and have an overall decrease by 5%. Then, once we're done with the virus and everything kind of moves on, everyone is anticipating things to kind of go back to normal and gain more momentum as we move on later into the year. So they're anticipating the end of the year to have a 4% increase in overall GDP with strong gains in early 2021. So really the difference, what we're seeing here is technically, yes, by definition, we are entering into a recession, though this is an event versus a true financial crisis. And I believe Wells Fargo Investment Institute puts it very well. We do not expect a repeat of the severe recession of 2008 to 2009 because the virus and oil shocks are not endemic to the financial system, but are rather external. Once the virus infection rate peaks, we expect a recovery to gain momentum into the final quarter of the year and especially into 2021. So what I like to break this down as is basically the virus, this event, the coronavirus outbreak, is like having a big snowstorm. If you remember Snowpocalypse or Snowmageddon that we had a few years ago, you can kind of look at this analogy. So it's snowing, no one can leave their house, things are closing, everything's kind of shut down. Well, what happens? In a couple months, the snow melts and everything starts to return to normal. After a few months, it's almost like the snow never happened. Yeah, you talk about it all the time, but things are, for the most part, normal. And that's what scientists are saying. If everybody's right and we're able to move through this, the virus infection rates drop off by early to midsummer. We should see by the end of the year things to start picking up again. Um, then from there, we need to talk about what's happening in the national housing market. So when it comes to the housing market, what we've seen over the previous 5 recessions, actually out of 3 of the 5, prices have increased. Um, but when you say the word recession, everyone thinks 2008, where we had 20% decrease in home prices. So what's the difference between 2008 and now? Well, we're about to get into that. First off, people have more equity today. So if you look at the numbers, in '05, '06, and '07, there was $824 billion of home equity cashed out of homes and being held. So no one had equity. People were taking money out, using their home as an ATM, taking money out to buy jet skis, taking money out to, buy a camper trailer, things that depreciate over time, not appreciating assets. Now, people have learned from the 2008, and over the last 3 years, only $232 billion have been taken out. So, really, what we're seeing is people are smarter these days. When they're taking out equity, they're doing it to most of the time put it back into their home and really work on appreciating the asset that they do have to even build more equity. So, really, from an equity standpoint, we're not looking at something crazy like that, too. Then, when you look at home prices appreciation, people seem to think that prices have just soared out of control. Well, they really haven't in the grand scheme of things. Of course, in '05, we had a 12.2 increase in the median home price. Nationally, these are national numbers. And of course, that's unhealthy. They say, in between 4 and 6% is healthy over long term. Well, we all know what happened. That was horrible financial situations and banks just throwing money out of control, and everything collapsed. The bubble burst and we went down to our, 12.5% in '06 to '11. And overall lost 4.15% in the median home price nationally. Then in 2012 to 2015, we did see an increase. And this 11.5% that people would be like, oh my gosh, that's crazy and abnormal and not healthy. Well, a lot of people like to say that that's just simply a rebound. This is us correcting from our previous fall back in '08, '09. Then in 16 through 19, we've just been steadily increasing. And what we're seeing there is those are healthy numbers. And prices are just starting to, level out a little bit, which is really good nationally. Next, we're going to talk about mortgage rates and how they are still at historic lows right now. If you go back to the '80s, we were almost at 20% interest rates, 16.6 being, the peak of interest rates. My goodness, I am so thankful that I did not have to take out a mortgage in the '80s. And then if you're looking at the historical average from all the way from 1972 to 2019, we're at 8.3 is the historical average. And then the historical average from the '90s, so from 1990 to 2019, it's 6.4. And we are still well below that at, hovering under 4%. Granted, mortgage rates are volatile right now, but with the Fed cutting the bank rate, that'll likely lead to mortgage rates being decreased long term. Right now, rates were crazy. They were like at 3%, which is an all-time low. Never seen them that low. And banks were just getting flooded with refis and new loan applications and things like that. So they've artificially bumped the rates a little bit. We're still hovering below 4% right now. And really, if you ask a lender, it changes hour by hour. So, but with mortgage rates being still at extremely low historically, under that 4% or even around 4%, even 5%, that's still below well below our averages that we're seeing over long term. Money's still cheap. So having that, it kind of spurs that buyer demand a little bit as well. Then when we move on to this affordability index, it really kind of calculates, it's a mixture of a lot of things. Um, Income, mortgage rates is part of it as well, the actual home price, and some other things that are kind of calculated in there to decide how affordable is everything with what's happening, for how inexpensive it is to borrow money. Of course, like in the 80s, we had terrible affordability because it was so expensive to borrow money. And now, even with prices where they are, nationally, if you're looking at the median and wages, we're still relatively affordable if you're going back and looking at what's happening long term. So we have that. Money's still really cheap. As long as that remains to be that way, we anticipate affordability to kind of stay the same as it has been the last few years. Then inventory levels. This is a big one. This is where supply and demand comes into play here. We are in a shortage. Again, these are national numbers, and economists say anything less than 6 months is considered a seller's market. Anything beyond 6 months is considered a buyer's market. Really, a balanced market is between 4 and 6 months. Some would say between 5 and 7 months. It depends on who you ask. But you can see nationally, 2019, we're at less than 4 months supply, which is a seller's market, or almost balanced if you were. But here in Ada County, we're at less than half a month overall in average, which is absolutely crazy. So even if inventory does come up a little bit, we're still going to be in a seller's market. And really, inventory coming up, and if demand goes down, that would be good for us. We'd be starting to balance out a little bit. Things would be a little less crazy, which is very good. Now it's time to get into the local numbers. We have low supply and steady demand. That's basically what it comes down to. If you start with the market dynamics, so this is what happened in February for the existing resale market in Ada County. So I was wrong in my prediction. Last month I said that the 374 available homes on the market was going to increase. Well, we ended up decreasing in February, and the number of available homes came down even lower to 337 available homes on the market. And really, that's also crazy because that's the lowest we've seen since 2004, since we started tracking this. I haven't seen them that low ever. So having that low inventory with spring is anticipated to come up even with everything going on as well. The ironic part about inventory being low, if you look at the black bar and the gray bar, closings and pendings, versus this time last year, we actually had more closed and pending this year than we did last year with more inventory. So that can tell you that demand is still very strong and things are still appreciating. Now, when we go to the average sold price, we started the year with a 362,000 in the average sales price, and now we're up to 368 for Ada County. So almost a 2% increase, so almost 1% a month. I anticipate that to continue even through May, as my last prediction will probably be between 4 and 5% on the average increase in prices there. So then when you're looking at the inventory levels, you can see we're less than half a month up to this 300 to 350, and really under a month all the way up to 600,000. Overall, with an average of half a month's supply, even if, just for instance, let's say 50% of the buyers out there decide, you know what, I'm on hold right now. I'm going to wait till things get better, things are chaotic, or I just decided I don't want to move. That would be good for us because inventory would finally start to come up. So we go above 1 month supply because that's just been too crazy for too long. So if you are a buyer that's serious right now, with what's happening, it might be a good time to start thinking about it very seriously because money is still really cheap. And as inventory comes up and buyers leave the market, you might have some really great opportunities out there. Um, so then let's look at what's happened week over week. If you look at number of homes on the market, so this is active listings, last week we had a total of 438. So if you go back to the market dynamics, whereas the beginning of March we had 337 homes on the market that were available, now we're at 438. And then this week, as of yesterday, we had 480 homes, and this doesn't include new construction, so this is just the resale market. Last week, we had 101 new listings hit the market. This week, 107 new listings hit the market. So that's our supply. Our supply is coming up. Again, the 480, if you look at what happened this time last year, it's still well below where our inventory was last year. So still pretty strong numbers there. We need more inventory out there. Then if you look at pending sales, this is demand. Last week, our totals were 720 homes were pending, were under contract. 175 of those went under contract last week between the 9th and the 15th. Then from homes went under contract for a total of 719. So of course some have closed in between them, but demand is remaining pretty stable, even though that's when all the craziness happened. So we're going to continue to monitor this week over week. Of course, my next video is going to be much shorter. I actually plan on doing this every Friday so that we can stay informed together and get through this so we can figure out what's going on and best anticipate your needs. So really what it comes down to is what's happening in the market and when is the best time to buy or sell? Well, there's two questions you need to ask yourself. One is, do you have a good enough reason to move right now? If you answer yes, then move on to the next question. Can you afford it? Have you talked to a lender? Are you in a good position financially? If you answer yes to both of those, well, great. We would love to help you. So contact us today so we can help you uncover what is going to work best for you and your specific situation. There's no reason to consider buying or selling right now if you don't have a good enough reason to move, or if you can't afford it right now. It really comes down to what are your needs, and then how is that going to fit into the market. It's hard to give you a one-size-fits-all answer. So really what it boils down to is these two questions. If you answer yes to both, we'd love to help out. I hope you found this informative, and please let me know if you have any questions. All right, so there you have it. We kind of went over a lot of information here, so please feel free to reach out if you have any questions or if you want to discuss your unique situation. As I mentioned before, we have a lot of new protocols in place, and we are more than happy to put together a meeting via video call, a Zoom meeting, or virtual. Like I said, there's a lot of options available to us out there. And if you're thinking about now being a good time to consider buying or selling, things are still moving, especially locally. So for now, we're going to continue to monitor the situation, and we're in it together. I wish you all well. And like I said, please feel free to reach out anytime if you have any questions. Thanks so much.